on the back of bonus announcement, Anushi?
Well, yeah, absolutely. As you said, NBCC is clearly a standout in trade today. It's hit about a 8%, 8.4% of an intraday high. But let's see what are the main reasons that we are seeing this gain today. Now, NBCC is considering a bonus issue on August 31. So they have slated a meeting on August 31 to consider the bonus issue of shares that we are looking at. Last bonus issue was in the ratio of 1:2, which happened back in 2017. So that was on the bonus part, why the stock is buzzing. But let's also go to the fundamentals as to why the stock is buzzing. So if we look at the recent orders in focus, its arm HSCC got orders worth about 528 crore. Now this was for the biomedical equipment as well as hospital furniture in Haryana. Along with this also they had received another 720 crore of orders. So this was about 710 crore for development of 2 land parcels in Jhansi, and again 10 crore for the Institute of Company Secretaries of India. Now if you take the consolidated order book in picture, that stands at about 81,000 crore as of June 24. But let's look at the earnings as well. So revenue was up around 11% at 2,144 crore in Q1. EBITDA also strong growth, 60.3% of growth, and the margins have inched upwards to 4.27% as compared to 2.96%. Net profit seeing about a 38.5% growth. But onto the outlook going forward, management targets a 13,000 crore of top line, which shows about a 25% of a growth. Margins slated at 5.5% to 6% for FY25, and PAT margins at 4.5 to 5% for FY25. The management also anticipates this 80,000 crore order book that we are looking at to go to the 1 lakh crore by the year end. So strong performance, even if you look at the year forward in terms of stock performance. In 1 year, it has seen about a 270% of a gain, 6 months 42%, and in 1 month 0.4% of a gain for NBCC India that we are looking at.
Sure, absolutely. Let's bring on our guests on board, Anushi. After that very comprehensive breakdown of NBCC, we have Rajesh Agarwal, Head of Research at Om Capital, and we have Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher. Both of you all welcome on the show. Rajesh, let me take it to you first. Bonus announcement technically doesn't signal any positivity per se, except the fact that you get additional shares and there's a larger free float. What's your sense? 10% move on NBCC. How do you view the stock as well as the announcement itself?
Good morning, Hersh. Good morning, Anushi. Good morning, Vaishali. You said it right. A bonus or a split does not add any value to the company fundamental itself. Just it increases the liquidity and the charm on the retail investors, I would say, when they go on hunting for lower price stock. Otherwise, fundamentally, that doesn't make any changes in the fundamentals of the company. But as far as NBCC is concerned, Anushi did a very comprehensive, detailed analysis of the data and all. So I won't add anything to that because it already has been done. But what I would like to add is NBCC basically is into 3 segments, I would say: project management, real estate, and EPC. And all 3 divisions are doing very well. While other real estate or a construction infra company, you find a lot of debt. This is a company which is debt free, I would say, and almost 70%. I said almost because 61% is with the Government of India, 5.96 with LIC, and 2.3 with CPSE. So that makes it 70% government holding. Float is also low. Fundamentals are very strong. It has been languishing since a very long period of time in the last 4-5 years because of various reasons like Amrapali going to its belt and all those things. Otherwise, it's a very strong company, debt-free company, having a good order book of almost 84,000 odd crores, which the management has clearly indicated that it would move to around 1 lakh crore. I think some bit of consolidation after this kind of up move today would be a very good price point for long-term investors to make an investment. Maybe 175, 180 odd levels would be a very good levels to enter come bonus.
Okay, so strong fundamentals on NBCC over here. But let me take it across to you, Vaishali. The stock has been flat for this month. It has been one of the strongest performers in the first part of the year. How is it looking on to you for charts like a company for NBCC?
Very good morning, all of you. Yes, so it has opened with a gap up, and the volume also is exceptionally high. So I think this shows the inherent strength in the stock, and I think this time it's very likely it can move past the previous high of 198, 199. I think this target of 210 cannot be ruled out.
Okay, let's start with our queries because we have quite a few. We have Ramu from Tirupati. He holds 320 shares of HAL. And I'm going to come to you on this one, Rajesh. Just look at that profit number. Nearly 8 lakh rupees of profit. 320 shares of HAL bought at 2,257 rupees a piece. Wants to understand where to from here. Classic case of retail investor making long-term wealth.
You said it right. The gentleman needs to be congratulated for such kind of patience of holding the stock, because retail investors generally tend to book out at 5-10% of profit. But yes, it's a good company, no doubt, with good order book. Government's focus on indigenization of defense is another feature which is helping the entire defense piece as such. And this particular company is sitting on a good order book. In the short term, there might be some long period of consolidation, but for a longer term horizon, it's a good hold. So what I would suggest is, if you are not in a hurry to book out profit, or not need of some money, stay put with the stock.
Okay, so stay put on HAL for this one. Rajesh, I'll stick to you for the next query as well. Now, this is from Mohit from Ludhiana, and he wants a view on Campus Activewear. He's bought it at a price of 284. Currently, he's sitting at a loss of about 494. Time horizon for about 2 years. Can you guide him on what's the outlook on Campus Activewear?
See, a strong company with a strong brand, and corrected a whole lot of market cap from the recent highs. But still, it's trading at a premium to its peers, I would say. It's better because still at these levels, I think the valuations are on a stretched levels because of fees and all. The numbers were not that great in the last quarter too, so it's better to book out on upticks.
All right, Vaishali, I'm going to quickly come to you on a couple of queries. We have Chandra here, and he holds Ujjivan Small Finance Bank at 42 rupees a piece. 200 is the quantity he holds. Your quick view with regard to this one, Ujjivan Small Finance, 42 rupees, 200 quantity.
So this stock has really corrected right from the recent highs of 53. Currently, it's making an attempt to give a bounce above from the oversold zones. So unless and until the stock moves past 45, 46 levels decisively and sustains, I think it should be in a range bound. So I would say wait it out, because above 46, he may test the levels of 55, 56 to start with. And then from there on, we can have a relook.
And same querist also has another query. Ease My Trip. He's purchased 300 shares at 41 rupees per share. Your view on that one, on Ease My Trip, Vaishali?
Yes, so this too also is in a similar pattern as Ujjivan Bank, the previous comment you mentioned. But today, right now, what we are seeing, it's showing some strength over here. Can be a good buying opportunity, or could average out over here. Expect a bounce up to 45, 46.
Okay, so next query is from Rajesh Maheshwari from Indore, and he wants a medium-term outlook on GMM Pfaudler. He's purchased about 75 shares, and this is at a price of about 1,600. Rajesh, I'll come to you on this one. How does GMM Pfaudler look to you on a fundamental basis?
See, fundamentals are very strong, and today the volumes have been very high, I would say. I think one should continue to hold with the stock. The numbers have been good. The only problem with this stock is the low liquidity. But for a long-term investor, I don't think liquidity would be a concern. Continue to hold.
Hold. I want to, really applaud a couple of viewers here, because the next stock that I'm asking for, and you'll know why, 25,000 shares is what Bhaskar has bought at 25 rupees a piece of NHPC. I mean, 4-bagger from there. Clearly, a long-term compounder playing out. Rajesh, let me come to you on this one. 18 lakh rupees of profit is what this gentleman is sitting on. Firstly, many congratulations. But Rajesh, what's your view now at this point? NHPC, do you believe that the run-up has been strong, and maybe over the next 2 to 3 years, what do you believe the stock has in terms of potential?
See, potentially for the next 2-3 years, yes, it can do well, but one should not expect the kind of performance it has seen in the recent past. 3% of the entire quantity you have, because that way what will happen is your capital will be back to you, and you will be holding will be the profit part. Otherwise, the company is doing very well. It has been giving good dividends to good capacity.
All right, so we've breached the 25,100 mark as we are speaking. We are now 1/3% higher. Let's pull up the Nifty 50 itself. Of course, just to cap off that point, Rajesh continues to be bullish on NHPC. But look at some of the real movers in trade today. You're seeing LTI Mindtree, of course, but Wipro 3.5%. Infi has moved up fairly sharply as well, 2.5% higher. IndusInd Bank chipping in as well. Bajaj Auto up 1.5% as well. In terms of the losers, you have Hero Moto lying at the bottom of the pile. But outside of that, everything at least lesser than 1% lower. So we're seeing 20 stocks in the decline, with some heavyweights being largely flat and not participating. Something like an HDFC Bank not participating at all. Kotak Bank as well, completely flat. The Nifty IT now going from strength to strength, 2.3% higher on the Nifty IT. You're seeing largely pressure come in from the Nifty FMCG, but if you look at the intraday graph of the Nifty FMCG, you'll see that we're currently sitting better than what we were at the start of trade or at any point of time in the trade today. So essentially, we're getting better as the day is progressing. Let's pull up the Nifty 50 itself, and let's pull up the graph for the Nifty 50 and see where we are at. We're sitting very pretty right up at the top of the day. 1/3% higher. We've breached 25,100 and we've come just about back off. We've pulled back off from that 25,100. Rajesh, let me come to you. Where next where it comes to the Nifty? Do you believe that valuations now starting to look slightly more expensive, or do you believe that earnings are catching up, keeping pace?
See, I don't think valuations are expensive, because at this point of time to 25,100, I would say Nifty valuation is around 10 years average. And when you talk about averages, then you have to look at things that are on a same platform. But a lot of things have changed into last 10 years. GST, PLI, digitization, a lot of things have changed. So I don't think that same kind of averages should be taken into consideration going forward. And not to forget, earnings are catching up. With interest rates likely to go down from here onwards, I think we are still a lot of way to go ahead. Even if Nifty doesn't perform, maybe mid cap, small cap, the entire space is buzzing. So yes, there are some pockets where valuations are stretched. There are some mid cap, small cap pockets where the fundamentals are not supporting. But you have to be very selective and be good stock selection. Do good stock selection, and if the management is good, the company projections are good, I think it's no point being in panic.
Vaishali, I'll come to you on the same one. Where to from now? When can we see this Nifty at an all-time high? How is it looking for you?
So technically, yes, we were expecting a target of 25,300. So that is the near-term target resistance that we would be looking at in Nifty.
All right, I'll move on to the next query now. RVNL, one stock which has been in correction in the last 1 month as we speak, but has been a strong multi-bagger in the last 1 year period as well. Vaishali, I'll come to you for this one as well. RVNL, Sushila Bellari has bought about 378 shares at a price of 154. Whether she should continue to hold this or exit, currently sitting at about 1,600 of a profit figure.
So I would say, well, right now there is no damage to the trend, and continue holding, because since 2 days we are seeing that there's some pickup coming in all the rail stocks. And RVNL to talk about, I would say keep a stop loss of 560, and if this follow-on buying continues, we can see a level of 600 to 630. So stop loss is a must, because if market corrects, then we may see some profit booking. But for now, it's a hold.
Okay, a hold on RVNL, but let's quickly switch focus. Tata Chemicals. We have a viewer here, Vishakha Patil from Mumbai. She holds 1,000 shares of Tata Chemicals at an average price of 1,060 rupees a share. Her holding period is 10 years. Rajesh, from a fundamental standpoint, can she continue to hold Tata Chemicals to eternity? Because my sense is she wants to hold it for the next 10 years, which is commendable.
See, holding for 10 years, a company like Tata Chemicals is a good theory. But what I would suggest is keep on tracking the quarterly numbers, other corporate actions and all. Otherwise, fundamentally, it's a very strong company in a strong caustic soda chemical, doing very well. They have some holdings in different companies which are also doing well. I think for a long-term horizon, it's a good company. But for a 10 years, you need to keep track on fundamentals every quarter. They come out with numbers and all. So keep a track on the performance and continue to hold.
Alternative to this one that you may recommend for a 10-year hold?
For a 10-year hold at this point of time, I would suggest in the large cap space, we have recommended our clients for Reliance, HDFC Bank, ITC and Larsen.
All right.
Rajesh, I'll stay for you for the next query as well, and this is from Karthik from Palakkad. He has about 100 shares of Dream Forks and bought it at a price of 450 or 440. What is your view on this one for the next 1 to 2 years?
It's for me?
Yeah, for you, Rajesh, on view on Dream Forks for the next 1 to 2 years.
See, this company has underperformed quite massively from its highs of almost 900 odd rupees to trading at 450 rupees when Nifty is trading at all-time highs. The numbers have been not that good. Last 2-3 quarters, the performance has been bad. And with the number of credit card users being denied lounge access services, I think there is pressure on the bottom line too. So it's better to book short-term profits in this stock rather than going for a long-term story unless some new corporate action or new announcements come in.
Okay, Vaishali, let me come to you. We have Vinay here who holds Shipping Corporation of India, 2,000 shares at 329 rupees a piece. Your views, if any, on this one?
So I think overall Shipping Corporation and all the other stocks have done very well. But right now we are seeing that, yes, it is in the consolidation after making the recent high. So I guess continue holding, but maintain a stop loss, because below 245, it would negate the view. And the stock needs to pick up, about 296 to 300, he may retest the previous highs. So I would say you hold with a stop loss.
Okay, and let me stick with you, Vaishali. Same viewer also holds 2,000 shares in HUDCO at 335. Your views on that one as well, because it's making a loss for him.
Okay, so HUDCO also has got into a consolidation phase. But however, the long-term trend is still intact. So I would say just hold with a stop loss of 270. Because this stock also can get into a new round of momentum right now, because it's already in the oversold, so we can see some pullback coming in.
Okay, so that was the view on HUDCO as well as Shipping Corporation. Now for the next query, this is from Jay Krishnan from Calicut. He has about Dixon shares at a price of for a medium-term holding. Vaishali, I'll come to you on this one. What is your view on a Dixon Technologies? How does it look in charts?
Well, the stock is really run up, but I think still there is some more steam. So continue holding. This can go towards 14,000 levels as well.
Vaishali, plenty of viewers now coming in with regard to short-term views. Zomato, average price 262 rupees is what a viewer has. Vinod Sharma from Delhi specifically. Now, he has bought 237 shares of Zomato at this price. Your view from a short-term perspective?
So from a short-term perspective, 240 is the support range and 280 is the resistance range. So either of the levels, if it breaches, need to act accordingly.
Okay, Rajesh, let me come to you. We have a viewer, Tejas from Nashik, holds 200 shares of DLF. Now this entire pack with regard to real estate, it's seen a sharp run-up when you're zooming out over the 2-year time frame. But how does DLF now look over the next 2 years, if you can give us your views?
See, for the next 2 years, it can be a good story. But in the short term, as you said, it has shown a sharp run up. There might be some phases of consolidation or correction. But for 2 years, it's a good story. The company has gone for debt reduction. Some of the major premium projects have been sold out very swiftly, I would say. And the number of new projects coming up is also great. The demand for demand from HNI and ultra HNI investors has been great in DLF. For the real estate pack, I would say, not the stocks. And one can continue to hold.
And I also want to club this with another query. We have Kapil from Ajmer who holds macro tech developers. Your views, Rajesh, between macro tech, DLF, some of the real estate players, what's the best way to play this?
See, the best way to play real estate as a whole for retail investors would be go for ancillary industries, because real estate as a play has a whole lot of problems like, inventory, corporate governance and all those things. So it's better to play from the housing finance sector or PVC pipe sector, ceramic tiles, paints. That would be a better play for retail investors to play realty. But if somebody wants to go directly into realty stocks, I think Shobha Developers, Oberoi Realty or a Godrej Properties are better bet than the others.
Okay, Sobha, Godrej, the preferred picks for Rajesh over here. Rajesh, I'll stay with you for the next query as well. Shekhar from Tamil Nadu, he owns about 300 shares of Manappuram Finance, and this is at a price of 160 each. Currently at a profit figure of 1.6. He's earned a profit of about 16,000 on this one. What's your outlook on this for the next 5 to 10 years?
See, we are not very positive on this stock or any gold finance company for the next 10 years, because a lot of things depends on the gold prices. That commodity cycle goes up, goes down. So it's better to be in a larger NBFCs where for a longer term horizon, maybe a Bajaj Finserv or a Jio Financials are better bets in the entire NBFC space. For a short term, yes, Manappuram can be held for a target of 225 to 30 odd rupees. But for a longer term, as you said, 5-10 years, I think Bajaj Finserv or Jio is a better bet.
Okay, Jio, Bajaj Finserv on Rajesh's radar, but completely out of time on this edition of the Ask Profit show. From myself, Anushi, thank you actually, Rajesh as well as Vaishali. We'll let you go on that one. From Anushi, myself, everyone who puts the show together, thanks so much for watching. Stay tuned, more on the other side. And of course, do tune in for those who haven't got their queries answered. We'll try to take your queries tomorrow.
Hello and welcome. You're watching NDTV Profit. I am Agam Vakil. Well, in the light of the launch of his new book, What Went Wrong with Capitalism, Ruchir Sharma spoke to market veteran Ramesh Damani in an NDTV Profit exclusive. Listen in as he explains why the United States is slowly moving away from its capitalist roots and why strong domestic investing endeavor may aid India going forward.
Well, in terms of, this is not my view in a way, which is the fact that, or not just my view, why did I write this book, right, in terms of what went wrong with capitalism? It's despite this incredible wealth creation that's happened at the top. If you look at the average person, especially in the Western countries, in places like even America, that has been such a standout economy for so long now, most Americans today feel that the economy or their country is moving in the wrong direction. In fact, 2/3 of Americans feel that the country and economy are moving in the wrong direction. Most young Americans today, which are not, in terms of, especially if they're Democrats, they feel they would rather have socialism than have capitalism. So there's a huge angst in America, in the Western countries, about what really went wrong with capitalism, and often the solution that is coming up. And we're seeing this even in the presidential campaign. If you hear people like Kamala Harris, even parts of Donald Trump's campaign out there, it calls for more and more government intervention.
More populism.
But I'd say more than just populism, it's about government intervention, that the government's the answer. Whether they talk about price controls, whether they talk about greater spending, greater subsidies, and even people like Trump about greater tariffs. These are all anti-market solutions is what they're talking about. So there's clearly somewhere a greater sort of, there's a distrust of what's happened in terms of like the results that have come, that capitalism has worked for a few. It's led to this creation of incredible companies, oligopolies, and lots of billionaires, as you point out. But why is the average person in so many of these countries, and the situation's even more dire in the Western nations of France or UK, why is so many people feeling so disaffected? So the book is really an examination of that, and the conclusion that I reach in the book is in fact an ode to capitalism. It says that capitalism did not fail. It was ruined, and it was ruined by the series of government intervention that we have already seen, from greater bailouts that take place that help the rich, from the...
That's 2008.
No, in general, I chart the history of bailouts, which is that I say that in America, it was not the culture of the American government to bail out private sector companies.
Correct.
But then for the first time in 1984, you had a bailout of a major financial institution. That time was Continental Illinois. And then you had savings and loans in the late 1980s. And then you had LTCM in 1998. And you had a series of actions after that where the bailouts have gotten bigger and bigger each time. And that leaves the average person feeling very disaffected that, okay, these great bailouts are happening for the rich and the almighty, and they are getting more and more entrenched. What about me? And then, like, also, what's happened to capitalism when America, the beacon of capitalism, is now instituting 3,000 new regulations a year? And the total number of regulations that they've withdrawn over the last 20 years has been 20 in total.
It's not really free, is that what you're saying?
Yeah, so what is capitalism at its core? I begin the book with my journey in India, with my growing up in India.
As a socialist.
As a socialist country.
Right.
And then for me, the value of capitalism, even when I was at a young age, was always that capitalism is about giving people economic freedom. That you give people economic freedom and you let their individual initiative flower. That for me is the core of capitalism. And that economic freedom, I feel, has been increasingly taken away by bigger and bigger government over time, and that's distorting capitalism.
Let me correct you there, though, Ruchir. It's a fair point, but as you yourself point out in the book, 1 in 10 CEOs in American tech company happens to be Indian. And Indian has risen to the heights of pinnacle power by being the presidential nominee for a major party in America. So opportunity is still there, freedom is still there. Are you a capitalist at heart or a socialist at heart?
No, I'm a complete firm believer in capitalism, but for me, the definition of capitalism and what capitalism to be is today has been severely distorted. I still feel America is a great place to be. It's a place, like that. There's a little slogan in the book, in fact, which I use, which I had seen, in fact, somewhere using it like on a placard, which is that someone was protesting. Exactly, someone was protesting against American occupation.
Yankee go home, but take me with you.
But take me with you. So it's still a great place to be. But I, at heart, have prospered as well from capitalist system, and there's a lot of good that America has to offer. But when the beacon of capitalism, the so-called land of the free, today has become a place where capitalism has been or is increasingly distorted, and you feel so many young Americans are saying they would rather have socialism than capitalism, I wanted to write a book to examine what's happened, why have they lost faith in the current economic system, and possibly what can be done about it, and then what are the lessons for people like us in India. Because at the end of the day, we are still moving in a capitalist direction, but we are still far away from being a truly capitalist country.
I'll get to that, Richard, but I wanted to ask you, you said you're a capitalist at heart and you've prospered, but you're not on the billionaires list. Does that bother you?
Of course, in terms of that, who wouldn't want to be a billionaire?
Yeah, but why? The opportunity was not there, or you felt you were short of that opportunity?
No, in terms of, listen, there are only 3,000 billionaires in the world, and it's a very...
And you saw markets and you saw economies way ahead of other people, so really the opportunity was there for you.
I'm very grateful for what I've been able to achieve. There's no end to it. I can look at the 3,000 people and say, why am I not there? Or I can look at the 7 billion people in terms of in the rest of the world who possibly sort of are still struggling, to make enough to even have one decent vacation a year, and much poorer in places like India.
Glass is half full for you.
For me, in terms of that, I'm very happy with what I've been able to get, but there's no end to this creative dissatisfaction. And I guess I sort of have two careers in a way. I'm an investor, but I'm also a writer, and I'm very happy at being able to do both. And I guess rather than focusing my attention on just one. So I think that's...
You're magnifying the world through your writing. So let me ask you to magnify. Interest rates have a huge bearing on financial markets, as you know. In fact, more than even precedents have sometimes. There have been two benchmark chairmen of the Fed who had different strategies. Paul Volcker in the 1980s and Alan Greenspan later on. Critique them for me. Who did what and who was right?
Well, Volcker will, I think, in the pantheon of central bankers, go down as possibly the greatest central banker because he squashed inflation. And remember, nothing is worse for the poor and for the average person than inflation. We know that in India as well. In fact, in India also, as I say, that we don't know whether economic growth wins you election or not, but high inflation definitely loses you elections.
Take out the bums.
Yeah, throw the bums out. If you have high inflation, that's the sentiment which comes. But now in terms of, you asked me specifically on Volcker's Greenspan. So Volcker fought this huge battle to squash inflation, generally through having tighter money, right, in terms of, and he also cut interest rates when he had to cut interest rates after inflation was vanquished in a way, and in the mid-1980s he was cutting interest rates. Greenspan, as you know, was fetid. In fact, in our investing years, when in India and in the early years, the biggest hero used to be Alan Greenspan, and then he got thoroughly discredited. And I think when we look back, and I capture that in the book as well, that one of the big turning points in capitalism, possibly for the worse, was in 1987. He had just taken over as the Fed chairman.
And the
stock
Dow
market crashed by 20% on that Black Monday in October.
Right.
And as a reaction to that, for the first time, a Fed chairman decided that he's going to explicitly prop up the stock market by cutting interest rates and pumping more liquidity in the system. And so that changed the risk behavior, I think, for investors too, which is that they knew that Greenspan was there.
The Greenspan put, as it's called?
That's right. So, you're well versed with these terms, so that the fact that that Greenspan's there to protect us on the downside,
the market,
but on the upside, it's all free, right? So it became a sort of system now where it was capitalism on the upside. You can capitalize your profits, but your risks will be socialized, because at the slightest hint of any trouble, the Fed's there. And the reaction function has continued now. As you know, that earlier this month, there was a one-day big fall in global stock markets. And what happened after that? everybody was rushing out to say the Fed needs to come and cut interest rates right away, and the Fed seems all set to cut interest rates in September. So that's the reaction function. But when markets are going up, no one talks about raising interest rates. No. But when markets are going down at the slightest hint of any trouble, we got to do something to rescue markets from falling. It's this asymmetry and risk is what I focus on the book, that this entire thing that no wonder you have the critiques of capitalism saying today that this is socialism for the rich, because when you're behaving in this way, who are you benefiting? Right? You're benefiting the entrenched. You're benefiting the existing people who have a big stake in the system. You're benefiting the asset owners who tend to be rich people. The poor people don't own assets.
And hence the rise of zombie companies, as you call it, right?
Yeah, so zombie companies is the other side of it. So on one end, if you have so much easy money being poured into the system, it allows the rich, the entrenched, to become richer because they have access to that easy money. At the other end of the spectrum, I call this zombification of capitalism, that when you have a lot of the deadwood in the system is kept alive. That is also what leads to inefficiencies and explains, as I say in the book, the productivity paradox, that why do we have a decline in global productivity growth taking place when you have such a proliferation of new technologies out there. And as I say about the zombie companies, one of the most fascinating, I think, aspects in the book is that, in the 1980s and 1990s, this term became popular in Japan.
Yeah.
Right? Because why? Because in Japan, the economy was going bust, and they decided back then that we got to prop up these companies by easy money and stuff, and they came to be known as zombie companies. These were companies that did not earn enough profits to even cover their interest payments for 3 years in a row. The American media back then, including the very liberal left-wing media such as the New York Times and stuff, would in fact mock these companies, saying that this is America, we don't do this. Keeping alive zombie companies. At that point in time, the number of zombie companies in America was about 2% of the total number of companies listed in America. Today, by some measures, that number is as high as 20%.
Of zombie companies in America?
Yeah,
that's
the
10x.
20% of companies listed in America today can, by some definitions, be classified as zombie companies. And even by conservative definitions, it's about 10%. So I'm just trying to just see how capitalism has changed. And there are consequences of this. Because the question some people ask me, okay, so what? That you have all these zombie companies and the government's rescuing, but the economy's, still doing okay and stuff. No, there are two major consequences of what's going on.
Yeah.
One is that productivity growth has declined. Because when you are interfering with the creative dynamism of an economy, you are interfering with the productivity mechanism in the economy. You're not allowing the deadwood to be cleared, and by keeping the deadwood there, you're discouraging new people from coming in at the pace that they should be coming in. And so that's the second consequence out there, which is that you're helping the entrenched, you're helping the incumbents, and so therefore even in America, right up until the pandemic, the number of new startups was declining, and now you have a situation where the big companies are there, and for longer at the top end, and you have at the bottom these zombie companies floating, and everything else in the middle is getting squeezed out. So if you look at even America today, the economy seems to be okay at the surface, but confidence among mid to small size businesses is plummeting. So I think that is the dichotomy, and the large firms are doing well.
Right, interesting conversations there between Ruchir Sharma and Ramesh Damani, but we shift focus back to the markets which have in fact made new life highs, and I'm talking about the Nifty specifically. And joining us now, we have Avinash Gorakshakar of Profit Now Securities. Avinash, good afternoon. Thanks for joining in. Avinash, before I come to you, as usual, let's take up the first company on our radar, and that is Reliance Industries, which will present another annual general meeting soon. We have Mihika who's joining us to give us what we can expect. Mihika, over to you.
The Reliance Industries 47th annual general meeting is set for tomorrow, August 29th, and this will start at 2 p.m. But when we talk about what the street is expecting, well, there's not much cheer as the key listings that the company has announced over the years may get extended and no major announcements are expected. In terms of unlocking shareholder value, the company may give information on 3 potential listings of Jio Platforms, Reliance Retail Ventures, as well as Reliance New Energy. However, according to BofA Securities, it doesn't expect any any major unlocking of value. For the retail segment, well, the street is likely to see any future launch formats, the possible investment into quick commerce segment, and the company has also been foraying into beauty and apparel segment, and the street is looking, you may see an announcement with global manufacturer Shein. As for the digital business, well, the Disney Viacom combined entertainment business has made headlines, so further details on the same. In terms of the new energy business, well, the company has planned out $10 billion of investments. However, the progress has been slow. Only $2 billion has been utilized. The clear timeline of the fully integrated solar module ecosystem is expected was going to come on stream in 2025. They're also going to confirm timelines for battery gigafactories by 2026, and the company is also expected to foray into the manufacturing of big wind blades. As for the oil to chemicals segment, which is the cash earner business for the company, unlikely to see any major investment announcements. The company could talk about supply chain routes as well as their crude supply decisions. And lastly, in terms of oil and gas, company could give an update on their new Krishna Godavari Basin wells, and the street already has discounted the FY26 earnings on multiple headwinds, especially the ban of single-use plastics in the medium term. In terms of how the shares have performed, well, data shows that Reliance shares have declined on most annual general meeting days. Stocks have fallen in the last 7 out of the last 10 days. This counted decline as much as 6.2% in 2020, and during the 2023 annual general meeting, shares saw loss about 1.5% on an intraday basis. Lastly, there was only one outlier, which was the 2019 annual general meeting, where markets were not open that day. Shares did rise 12% after the day after, due to a key deal announcement with Saudi Arabia's Aramco.
All right, Mihika, thank you so much for getting us all that we can expect from Reliance Industries AGM tomorrow. But Avinash, come in on Reliance in general, your view here. What's the way forward?
I think, Agam, my sense is one should not expect major fireworks or big announcements. But I think, yes, some indication the market is building in that whether the retail business is getting ready for some sort of value unlocking. So I think, any commentary on that would definitely be something sentimentally positive for the stock. But I think broadly, I think the markets would obviously like to know on the digital side, specifically on the geofinance kind of business, what is the commentary of the management, because this business has now got listed. A major disruption is expected in the next 1 to 2 years. So what kind of growth plans this company has got and how it's going to scale up its business is something the market should be looking forward. The existing business like the telecom business, the oil and gas business, I don't think there are going to be any major announcements. But yes, I think markets would obviously like to know what is the kind of tailwind there. So I think the geo finance business is going to be critically important this time. Now that the business is listed, I think most probably markets are expecting some big announcements to be announced, from this division, which I think would be, obviously be highlighted by the management tomorrow in the annual general meeting.
Of course, we need to keep an eye on that one. But let's move on and talk about the infra sector. Now, there are a lot of relatively smaller names with a lot of updates with respect to order wins as well as raising of funds and many others. Let's get in Anushi to give us a roundup of all these infra and power companies which have been in focus on the back of news updates. Anushi, over to you.
Hey Agam, so as you speak, there have been a handful of names and which have been in focus as for the fundraise and the project wins which have happened. I'll start off with Asian Energy first. Now, Asian Energy is planning to raise up to 160 crores. Now, this is via warrants, and the purpose to utilize these net proceeds will be for exploring more growth opportunities, for enhancing their working capital requirements, and also for other general corporate users for the business. Moving on to SPL Infra now the company is raising up to 331 crore on a preferential basis, and this is at a price of 215, which if you take at the current market price is about a 11.6% discount figure that we are looking at. So this is on the bit of Asian Energy and SPML Infra. Third one also is IndiGrid Trust. Now here Alberta Investment and HDFC Investment Corporation and HDFC Manage Life will invest up to 567 crore and 100 crore respectively, which adds up to 667 crore. The company had earlier stated that it plans to raise up to 695 crore through this fundraise, and this is after it already had a follow-up from its successful OFS which is the offer for sale which happened earlier. Now coming to this order win part, PNC Infra is in focus. Now here they have won highway projects of up to rupees 380 crore in UP and Bihar. It emerged as the lowest bidder in these, and the project value as we speak is 380 crore. Project is to be executed in the next 910 days. And if you look at the consolidated order book for PNC Infra, that stands at about 14,100 crore. So 4 companies in the infra space and the power space which are in focus ahead of the fundraise and the order wins which have taken place.
Okay, Anushi, thank you for getting us that roundup of all the infra and power companies in focus. Avinash, wanted to talk about the infra sector with you in general. With your firm, are you spotting opportunities in the infrastructure space? Any names that look interesting to you at the moment?
I think, Agam, the kind of contracts and the orders which are coming to infra companies is quite encouraging. In fact, one of the names, PNC Infratech, as well as PSP Projects and KNR Construction, these are companies where we believe that a lot of EPC work has come in the last 3 to 6 months. Now that elections are over, the project momentum of awarding these new orders has started gaining a lot of traction. And we believe that FY25 should be significantly better for these companies, considering the fact that now top line and order book is going to be significantly better than last year. So I think, it's a pick and choose in this market. I would say that wherever the order book is very strong, the execution is pretty solid. I think these are companies which possibly could see a lot of traction in the second half of FY24-25. So I think we are continually positive on these companies. Maybe in the first half, you could see a little bit of sluggishness, but the second half typically is supposed to be a very strong period for these companies where execution is going to be significantly higher than the first half.
Okay, well, Avinash, hold that thought. Let's also get in Mihir Vora. He's a CIO at Trust Mutual Fund who's joining us on the show right now. Mihir, good afternoon. Thanks for taking the time out. Your quick view on how the benchmarks have behaved and performed right now. While some may argue that we are at expensive valuations, there is another pocket in the market which suggests that there's a lot more to come. Now, let's just stick with the Nifty 50 and perhaps the large cap stocks, because I want to take up the broader markets as well. But for now, what is your own assessment on the large cap valuations?
Hi. First of all, congratulations to all of us. Never complain when the markets are in a new high. So the point is that Nifty earnings this quarter have been muted, but that's at the aggregate level. In fact, even if you look at the broader market of 500 stocks, the earnings are like single digit compared to what they were, a few quarters ago. So obviously the margins tailwind is no longer there. And now we are back to normalized margins and normal growth. So if you look at the valuations of the large caps in aggregate, I would say they are a little expensive, but not really so expensive that one needs to be worried about. And there is enough scope for stock picking within the segments also. For example, financials is the largest segment, but within financials, the lenders have underperformed, banks and NBFCs for quite a few quarters. So there is pocket of value emerging in some quarters like that. Probably we can also say that some of the other segments like consumer discretionary, even some of the large cap names in cap goods and infra have not done as well as some of the mid and small caps. So there is relative value to be found in the market across market caps, I would say.
Sure, Mihir. So I was actually taking a look at the kind of returns that we've seen for the mid cap and the small cap indices, advancing by around 28-29% year to date. In comparison, we've seen the Nifty advance by around 16-17%. So that's clear outperformance when it comes to the broader markets. Now, your assessment of whether or not there is froth in mid caps and small caps largely at the moment.
Certainly. So there is froth, and there has always been froth, frankly speaking. And I would say that it's time to be a bit more choosy compared to before, and not really go down and compromise on the quality of the companies that you're investing in. So the rally is quite broad-based. As you rightly mentioned, the small caps, the micro caps are seeing a lot of retail action. And obviously when retail is there, not everybody is so discerning in terms of quality, unlike, say, the HNIs or the institutions, so to say. So I think as retail investors, one needs to be careful about really getting trapped into something that you regret later, so to say. But having said that, the economic activity recovery itself is quite broad-based. You are seeing nascent signs of rural consumption coming back. You are seeing some nascent signs of even the mid-cap and the private sector starting to invest in manufacturing capacity creation. So I think we are in for a decent cyclical run, and probably we are at the beginning of that run, and this can last for a while. So I would not be, too worried at the aggregate level, both in terms of growth prospects as well as valuations.
All right. Mihir, of course, to a certain extent, the extension in the market rally at the moment is a function of liquidity. Now, off late, what we are seeing is that FPIs have turned buyers. I know it's not a very not for a very long period, but domestic institutions, on the other hand, have continued to buy into Indian equities, and I suppose that that's largely because retail participation has had plenty of flows come through as well. At what point in time do you think that there could be a challenge when it comes to the liquidity at the moment, and any other factor that you could potentially see when it comes to which could pose a risk in the current environment?
So right now things look hunky-dory because we are talking about the Fed beginning to ease the cycle, cut interest rates as soon as next month. RBI probably will do it after 3 or 4 months after the Fed. So as far as the peak tightness or the peak interest rates are concerned, I think they are pretty much there. So things can only go better from here. There can be headwinds if there are commodity shocks like oil because of problems in the Middle East, or if the US really slows down much faster than expected, much worse than expected. Those could create headwinds to the overall growth story. The good side is that we are not that dependent on exports, though we should be exporting much more. But in general, we run a trade deficit, so we should be relatively less impacted by a US dollar. But that is something definitely to keep in mind. There could be global headwinds.
And a final question then, Mihir, on how markets are being seen globally, how Indian markets are being seen globally. Now, there's a chance that the Federal Reserve could potentially cut rates or start the cycle of cutting rates this come September. What sort of an impact could it potentially have for emerging markets like India going forward?
So that could potentially have a positive impact. As I said, one is that liquidity conditions will ease. That's one good thing. Second is that the dollar strength will no longer be a concern. So typically, when the dollar strengthens, it tends to pull money away from all markets back to the US, and vice versa. When it gets cut, we should see the dollar weakening. In fact, in the last few days, we've already seen the DXY index, which is the dollar index against the market of global currencies, already beginning to weaken. So that should ease the pressures on emerging markets, and if the dollar continues to weaken because of rate cuts, then you can actually see good flows to emerging markets restart. So I think that could have a positive impact on flows.
Okay, Mihir, we'll leave it at that. Thank you so much for joining us and taking some time out and talking to us on the occasion of Nifty making yet another new life high. Well, with that, it's all that we have on this edition of Hot Money, but lots more lined up on the other side. Stay tuned to NDTV Profit and we'll keep getting you more.
and welcome. You're watching the IPO show. We have with us a special guest who joins us and who's been tracking the primary markets for decades now. Astha Jain, Senior Research Analyst of Hem Securities, joins in. Astha, you've obviously had it extremely busy all of 2024. It's the time and the season of listings. I'm going to start with Orient Tech. This one, of course, listed on the exchanges today, was subscribed 152 times, got a debut with a 46% gap up. Now, over to you for questions. What does an existing investor who managed to get lucky and get subscribed to Orient Tech do? Should they take some profits off the table today? B, if they weren't lucky enough to get an allocation to Orient Tech, should they consider buying it today?
Hi, good morning, Samina. First of all, yes, a very busy month, very busy week. And from last 2 years, we are seeing this trend that usually August and September are usually very hot months for the IPO, and the number of the IPOs are quite high in these 2 months. So yes, now talking about Orient Technologies, first of all, we have already recommended subscribe for this IPO, and we really congratulate to all the allottees, who got this allotment. So what should they do? I think they should book partial profit, because now when the IPO came, it was at the price to earning multiple of somewhere at around 20-21. But now at this high price, because now we are seeing that it is already quoting at 44-45% premium. So I think the valuations have become a little more expensive, and we are not seeing a much upside from here. Maybe one can see the upside of around 10-15% more from here. But now the upside, there is not more upside left from here, and that's why we are recommending to book partial profit if anyone has got the allotment in this IPO. But for those who have not received any sort of allotment, please don't be in a hurry to enter into this IPO. The company is already quoting it a high PE multiple of more than, I think, around 25 at this price of around 302 or 303 at which it is quoting right now. So just wait for some dip to come and then make entry into the stock, because the upside is now limited from here. So from the risk reward basis, I think it is not advisable to put money currently at the price of around 303, 304 at which it is quoting right now. Just wait for some dip, let the price fall to the level of around 280 odd levels, and then make entry into the stock. So those who have got the allotment, they can book partial profit. But those who want to make a new entry, as they were unlucky at the time of allotment, they should wait for some fall and then make an entry into the stock. This is what our recommendation is for Orient Technologies at present moment of time.
Take your profits off the table. Don't get caught. It's a great debut, but of course, wait it out, because it does look expensive, especially after the sort of run-up the stock has seen on listing day. Well, one on top... of course, on top of our minds is Premier Energies. Premier Energies is the largest solar cell exporter to the US market in FY 2024. Ahead of its IPO, Premier Energies mobilized 646 crores through anchor investors, which included the names like Nomura, BlackRock, PGGM, Government Pension Fund Global, Abu Dhabi Investment Authority, Morgan Stanley, to name a few. How does this one look? I think there's a consensus aggressive buy call on Premier Energies. Would you agree, Astha? Because even the numbers were phenomenal, and with the government's commitment to green energy, this cannot be missed, I would imagine. And of course, there's marquee clientele as well.
Yes, you are absolutely right, because the kind of concept it is into, that is into the solar cell manufacturing as well as solar module manufacturing. So I think the kind of business they are into, it is really very hot, and the government's support is totally there with this sort of business. Along with that, what